Hey, this is Joe Doman from Joe Knows Real Estate, powered by Remax Gateway. I'm here today with mortgage expert Josh Burrows from Potomac Mortgage Group. Thanks for coming, Josh.
Thanks for having me out.
And today we are coming to you from Brambleton Welcome Center in Ashburn, Virginia. So a big thank you to Brambleton also. Today our hot topic is going to be fixed rates versus ARMs. So the famous ARM vanished from the face of the earth for 3 years now, and now all of a sudden it's making a comeback. So we have clients now, a pretty good portion of the clients that we have, they're a little bit hesitant to even talk about getting an ARM or getting an ARM. Can you tell us why people shouldn't be scared to go ahead and get an ARM again? Because a lot of people got burned in the past.
Absolutely. And one of the biggest reasons people were burned in the past is because the guidelines for qualifying people on ARMs, they could qualify at a really low rate, and they'd get into a house that they ultimately couldn't afford when the ARM adjusted. So right now,
you just have to state your income.
Right.
Back in the day.
Didn't even have to use to have a heartbeat. But right now, one of the big stopgaps to that is when you look at an ARM product and you go to qualify, you actually have to qualify for a rate that is 2% higher on conventional mortgages than the starting note rate.
Okay.
We really haven't seen ARMs be popular recently because fixed rates and ARM rates were so close together that it didn't make any sense. You might as well take the longer security. But now we're starting to see that gap spread out again to where the ARMs really are a better interest rate than the fixed rates.
Okay. So just to kind of go back on that touch real quickly. So interest rates, let's say for round number sakes, around 5.25%.
Right.
So the buyer, our client, would have to qualify for being able to afford 7 or 7.25%.
Correct.
Okay.
Correct.
So it needs to be 2%.
Right. So that when that ARM actually does adjust, you're not going to see a huge payment shock or inability to pay the mortgage.
Okay. Okay. So how do you know? So when you meet with one of our clients or something, how do you know which one's the right fit? Whether it's the fixed rate mortgage or the ARM?
Sure. Well, that's part of what we do is sit down and really counsel with our clients to find out what's important to them. So we go through what the fixed rate payment is. We go through what the ARM payment is. We look at time horizon is a big key. We also look at the risk tolerance of the buyer. If you're really risk averse, an ARM's probably not for you.
Right.
And then we also look at the caps on the mortgage. That's basically how much, when an ARM actually does adjust, how much it can adjust up or down to make sure that
Sure.
fits your lifestyle and it fits your financial goals.
What's on average the cap? It usually can't. So say the ARM is up in 5 years. The 5 years comes up. It can't jump more than. It can't jump 4%. It can only jump like a maximum of 2. Correct.
Generally, you see caps at around 2% for the first year adjustment. Every year after that, you see it at about 2%. And then for the life of the loan, up or down, it can go about 5%.
Okay. And then could you give us a situation where maybe an ARM would be a better fit than a fixed rate for somebody? An example?
Yeah, absolutely. Generally, what you want to see is a time horizon of about 5 years or so for how long you actually plan on staying in the house.
Sure.
What I always recommend is that you take an ARM that's 2 years farther out than how long you expect to be in the house, because
Right.
you never know how long it would take to sell, or if you wanted to hold on to it another year. Also, you want to take a look at an ARM product with good caps, 225 caps or solid caps. If you're under that, then that's great.
Sure.
Also, what you want to look at for is you want to make sure that there's a decent spread between the ARM rate you're taking and the fixed rate. I'd say at least about 1%. Otherwise, you're better off going with the longer time horizon in case you decide to hold the property.
Okay. All right. Gotcha. That was a lot of information, man. Thanks again, Josh. I appreciate it. Thanks. See you guys soon.